SBA loan limits are increasing to $10 million, and that could reshape commercial real estate financing. And the SBA potentially increasing its loan limits from $5 million to $10 million could become one of the biggest commercial financing shifts in years. And most people are viewing this simply as bigger SBA loans, which that's completely true, but that's missing the bigger part of the story. And what this does, this potential change could dramatically expand access to growth capital for business owners and create new opportunities in owner-user commercial real estate, but also to fuel commercial real estate transaction volume across the country. And for business owners who are trying to scale, to acquire property, to expand their operations, or to reduce their occupancy costs, this could become a major competitive advantage. And as both a commercial real estate broker and a capital advisor, I believe this change could create significant opportunities for mid-sized businesses that previously struggled to access affordable long-term financing. So, why SBA loan limits matter so much? And SBA financing has historically been one of the most powerful tools available to owner-occupied business owners because it offers lower down payments than traditional options with longer amortizations and competitive fixed interest rates, but also owner-user real estate financing or just working capital financing, but there's reduced equity requirements versus conventional loans from a bank. So this is a good option. And the current SBA framework works extremely well for small to medium-sized businesses. But many growing companies eventually hit a ceiling and grow out of the use of that program, and this expands that program. And once projects become too large, businesses often get pushed into more expensive conventional financing structures with shorter balloon loans and higher down payment requirements and additional collateral requests, but most importantly, more restrictive underwriting. So a higher SBA loan limit could help bridge that gap. And this could create a major owner-user commercial real estate boom. And one of the biggest impacts may occur for owner-user commercial real estate. And many businesses currently lease industrial buildings and retail centers and medical offices and warehouses and flex space and office buildings because conventional financing becomes difficult at larger loan amounts. And if SBA financing does expand towards the 10 million mark, more businesses may suddenly become buyers instead of tenants. And that changes everything. So instead of paying rising lease rates and facing renewal uncertainty every lease term, you can be building equity. Or instead of building equity for the landlords, you could be building it for yourself. And business owners may have more flexibility to choose to acquire their own facility and to lock in long-term occupancy costs, but also to build equity and gain operational control, and in doing so, improve their long-term balance sheet strength. And this could become especially important in rapidly growing markets like Houston, Katy, and Fulshire, where industrial and retail occupancy costs continue rising. Mid-sized businesses could benefit the most. And this potential increase is not just for small business anymore. It may create opportunities, and particularly for manufacturers. SBA's big push is for manufacturing right now, but also for medical practices and logistics companies and contractors and automotive businesses and restaurant groups and industrial users and retail operators and professional service firms. And many mid-sized companies are large enough to need bigger facilities, but still small enough to benefit tremendously from SBA-style financing structures. So instead of using expensive private debt or highly restrictive conventional loans, they will gain access to longer-term fixed-rate financing, lower equity requirements, and improved monthly cash flow, but also better expansion flexibility to take the next leap. And that can significantly improve business scalability and improve the American ecosystem. So, why this could fuel commercial real estate transaction volume. And if more businesses gain access to larger owner-user financing, transaction activity could increase substantially. And this could impact industrial buildings, medical offices, flex properties, retail centers, automotive properties, warehouse facilities, even office condominiums, and mixed-use owner properties. And in many cases, SBA financing becomes that unlock key that allows transactions to happen. And a higher loan limit may increase the buyer pool for larger commercial properties that currently sit in a difficult financing range between small and medium business lending sizes. And it's where institutional capital doesn't really serve. So that financing gap has historically limited deal velocity. And this proposal could help close that gap. So the competitive advantage of owning versus leasing. And one of the biggest long-term wealth creation strategies for business owners is owning their real estate and their business owning the real estate that their business occupies. And many entrepreneurs focus entirely on growing operating income while overlooking the long-term equity potential of real estate ownership. And commercial real estate ownership can create appreciation in your real estate, tax advantages for your business. It can help you grow equity and protect you against inflation. It can also offer rental income opportunities and give you strong exit strategy flexibility. And in many cases, the real estate eventually becomes as valuable as the operating business itself. And this is why this SBA discussion matters far beyond financing alone. It directly impacts long-term business wealth creation. So why business owners should prepare early. And if SBA loan limits do increase, and it sounds like they will, competition for owner-user properties will likely rise quickly. And the smartest business owners are already preparing by reviewing their financial statements, improving their cash flow reporting, strengthening their liquidity positions, and understanding their debt structure, and evaluating expansion timelines and analyzing lease versus own scenarios. And that's where a CCIM can help you analyze this with a more statistical background. And the businesses that prepare often early gain the biggest advantages when the financing environments shift. Final thought for the day is the SBA potentially increasing loan limits to $10 million could represent a major turning point for business financing and commercial real estate ownership. And this isn't simply about larger loans. It's about expanding access to capital for businesses, helping businesses, American businesses, scale, increasing owner-user acquisitions, improving financing flexibility, and driving commercial real estate activity, all the while creating long-term wealth opportunities. And as a commercial real estate broker and a capital advisor, I help business owners evaluate both the real estate and the financing side of the equation so they can structure deals strategically and not just secure debt. Because in commercial real estate, structure often matters more than rate. That, my friends, is it for the day. I would love to have a conversation with you. Please visit my website at billrapponline.com. You can schedule a consultation, and I look forward to having a conversation. Have a good day.